Hey dollar dreamers, welcome to this new video where we will be discussing the future of Bitcoin. If you want to learn more about money and finances, make sure to hit the subscribe button and turn on notifications. 1. Introduction to Bitcoin and its underlying technology, blockchain. First, let's talk about Bitcoin. Bitcoin is a revolutionary digital currency that has taken the financial world by surprise. Introduced in 2009 by an anonymous person or group using the pseudonym Satoshi Nakamoto, Bitcoin operates on a decentralized network known as blockchain. At its core, Bitcoin is designed to enable secure, peer-to-peer transactions without the need for intermediaries like banks or governments. This decentralized nature makes Bitcoin resistant to censorship and allows individuals to have full control over their finances. The underlying technology that powers Bitcoin is blockchain. Blockchain is a distributed ledger that records all transactions made using Bitcoin. It consists of a network of computers called nodes that work together to validate and verify these transactions. Each transaction is grouped into a block and added to a chain of previous blocks, forming a chronological and unchangeable record of all Bitcoin transactions. One of the key features of blockchain is its transparency. All transactions recorded on the blockchain are visible to anyone, providing a level of trust and accountability. Additionally, the decentralized nature of the blockchain ensures that no single entity has control over the network, making it highly secure and resistant to tampering. 2. Current status and trends of Bitcoin, including market value and adoption. Now we discuss the current status and trends of Bitcoin. The current status and trends of Bitcoin reflect its growing prominence and adoption in the financial world. Bitcoin has experienced significant fluctuations in its market value since its inception, capturing the attention of investors and traders worldwide. In recent years, Bitcoin has seen a surge in popularity and acceptance both among institutional investors and the general public. Major companies including Tesla and PayPal have embraced Bitcoin by accepting it as a form of payment or incorporating it into their financial operations. This increased adoption has helped legitimize Bitcoin as a viable digital currency. The market value of Bitcoin reached unprecedented heights in 2020 and early 2021. In December 2020, Bitcoin surpassed $20,000 per coin, and in April 2021, it reached an all-time high of over $60,000. However, it is important to note that the cryptocurrency market is highly volatile, and the value of Bitcoin can fluctuate significantly in short periods. Bitcoin's growing adoption extends beyond financial markets. It has also gained traction as a means of remittance and a store of value in countries facing economic instability or hyperinflation. For example, in countries like Venezuela and Nigeria, where the local currency has experienced significant devaluation, Bitcoin provides an alternative form of currency that allows individuals to preserve their wealth and conduct cross-border transactions more easily. Overall, the current status and trends of Bitcoin demonstrate its growing acceptance and recognition as a legitimate asset class. While market volatility remains a factor to consider, Bitcoin's potential as a decentralized digital currency and store of value continues to attract attention and fuel discussions about its long-term prospects. If you're enjoying this video and want to continue learning about money and finances, make sure to hit that like button and subscribe to our channel for more informative content. 3. Discussion of potential future scenarios for Bitcoin. Now let's talk about the potential future scenarios for Bitcoin. The future of Bitcoin holds several potential scenarios that could shape its trajectory as a digital currency and store of value. These scenarios encompass increased mainstream acceptance, regulatory developments, and technological advancements that could have a profound impact on Bitcoin's adoption and value. One potential future scenario for Bitcoin is increased mainstream acceptance. Over the past few years, we've witnessed a growing number of businesses, financial institutions, and individuals embracing Bitcoin. This trend could continue as more companies recognize the benefits of accepting Bitcoin as a form of payment. Increased acceptance would provide a significant boost to Bitcoin's legitimacy and could lead to broader adoption by the general public. Another factor that could shape Bitcoin's future is regulatory developments. As Bitcoin gains prominence, governments and regulatory bodies around the world are grappling with how to address its regulatory framework. The approach taken by different countries varies, with some embracing Bitcoin and blockchain technology, while others remain cautious or even skeptical. Regulatory clarity and favorable frameworks could provide a more stable environment for Bitcoin to thrive. attracting institutional investors and fostering great trust among potential users. Technological advancements also play a crucial role in Bitcoin's future. As the underlying blockchain technology continues to evolve, improvements in scalability, speed, and privacy could enhance the functionality and usability of Bitcoin. For instance, the development of second-layer solutions like the Lightning Network aims to address Bitcoin scalability challenges by facilitating faster and cheaper transactions. Additionally, advancements in privacy-enhancing technologies might increase Bitcoin's appeal as a secure and confidential means of conducting transactions. Furthermore, the integration of Bitcoin into traditional financial systems could have a significant impact on its future. If Bitcoin can seamlessly interact with existing banking and payment infrastructures, it could bridge the gap between traditional finance and the world of cryptocurrencies. 4. Consideration of the impact of all Bitcoins being mined and the potential implications for the cryptocurrency market. Now let's talk about considering the impact of all Bitcoins being mined. The impact of all Bitcoins being mined and the potential implications for the cryptocurrency market are important considerations in understanding the future dynamics of Bitcoin. Bitcoin operates on a deflationary model with a limited supply of 21 million coins. As mining rewards decrease over time, the rate of new Bitcoin creation slows down until all 21 million coins are mined. This process has significant implications for the cryptocurrency market, including price dynamics, market sentiment, and the role of Bitcoin as a store of value. One potential implication of all Bitcoins being mined is the scarcity effect. As the available supply of new Bitcoins diminishes, the scarcity of the digital asset increases. This scarcity can create upward pressure on the price of Bitcoin, as demand may continue to grow or even outpace the limited supply. Scarcity has historically been associated with increased value, and Bitcoin's finite supply could drive increased demand from investors seeking a hedge against inflation or a store of value. The diminishing supply of new Bitcoins also impacts the role of miners in the network. Miners play a vital role in securing the Bitcoin network by validating transactions and adding them to the blockchain. Currently, miners are incentivized through block rewards, which consist of newly minted Bitcoins. As the block rewards decrease over time, miners will increasingly rely on transaction fees to sustain their operations. This transaction could lead to changes in the mining landscape, with miners focusing more on transaction fees and efficiency, potentially leading to a more secure and streamlined network. The completion of Bitcoin's mining process could also affect market sentiment and investor behavior. Mining has been an integral part of Bitcoin's narrative. Some investors may perceive this event as a positive signal, reinforcing the scarcity and value proposition of Bitcoin. On the other hand, others may view it as a turning point, questioning the future viability and sustainability of the cryptocurrency. Market sentiment and investor perception have a substantial impact on price volatility and market dynamics. Furthermore, the completion of Bitcoin's mining process raises questions about the long-term stability of the network. Currently, mining provides a crucial mechanism for validating transactions and maintaining the security of the blockchain. Once mining is complete, the network will rely completely on transaction fees for its security and operational sustainability. This transition poses challenges in terms of ensuring sufficient transaction fees to incentivize miners and maintain network security. Remember, the future of Bitcoin is shaped by various factors, including mainstream acceptance, regulatory changes, and technological advancements. Stay engaged and informed to make well-informed decisions in this dynamic market. By subscribing to our channel, you'll gain access to more valuable insights and strategies to help you on your journey. Thank you for watching this video on the future of Bitcoin. We hope you found it informative and inspiring. If you enjoyed this content, give it a thumbs up and share it with your friends for more money and finance tips in the future. As always, we appreciate your support and look forward to helping you achieve your financial goal. Thanks for watching the video till the end. We'll see you in the next video.